People often ask me, can I get a VA loan if I have open collections on credit? And that's a very good question. And the answer, like a lot of things with VA home loans, is it depends. You might be wondering, well, gee, that's a kind of vague answer. And that's true because VA home loan is very, very flexible purposely because they want lenders to have their own guidance. So they give lenders a lot of latitude to use their own judgments. The VA guideline, the main one that you need to know if you have collections on credit is you can't have any rental late payments or mortgage late payments. And so on the rent, it's a 2-year waiting period on rent with no late payments or no evictions. On the mortgage, or if you're a homeowner and you're buying a new home, then it'd be 1-year waiting period with no late payments. And that can be lowered with extenuating circumstances. So extenuating circumstances, job loss, medical issues that are outside of your control, or inability to sell your residence. So those would be considered extenuating circumstance. And sometimes you can get those rules waived where, maybe you lost your job and you weren't able to pay your rent or mortgage for a certain period, then those rules could potentially apply. Now, for other types of collections, there's no official guidance. They basically say use your best judgment, which means there's a lot of what's called lender overlays, which is a lender rule over and above what the VA requires. So if someone tells you, oh, the VA said this, and it's not related to the rent or mortgage payment, then you can safely assume that's a lender overlay. Now, a lot of loan officers don't realize that, and they'll say it's a VA rule just because they don't know any better, but it's a lender overlay, which means you could probably shop around and possibly find a lender that could do it. And because I am a full-service mortgage broker licensed in many states, I have access to over 100 lenders, and we've got lenders for all kinds of different situations. And a lot of the time, it comes down to underwriter interpretation. And so one of the things they do look at is the collection date. And believe it or not, there's no standardization of that either, because oftentimes in a collection situation, you might have, for example, somebody I worked with, they had a cell phone bill, for example, and the cell phone went into collection 3 years ago. They broke the contract and it got sold multiple times. And then it went to another collection agency and something else happened. And so would that be considered a 3-year-old collection based on the date that the collection actually happened, or a 1-year-old collection based on when that new collection agency actually took over that payment? And the answer is it depends on who you're talking to, because each underwriter has their own standards on that, just to make it incredibly confusing. But luckily, because I do have a lot of people I work with, I will ask each one what the rules are to figure out how that works. So I'm going to go through some different types of collections and just give you some basic guidance on what underwriters have told me on how their company looks at this. Medical collections are pretty easy because nobody really cares, honestly. It can be open. They know that doctors are the last ones to get paid, and they don't really consider it the same as defaulting on any sort of debt. So if you have medical collections, I would say just leave them on credit. Yeah, it's going to affect your score, but it shouldn't affect the approval process too badly. Certainly ways around that one. The next one is child support collections. Now those they can garnish wages. It can be a mess. And so, yeah, if you have child support collections, you're going to have a very, very tough time with approval. You're going to get that stuff caught up for sure. That's just a mess all around. Next one is credit card collections. Now those are problematic. It's a recurring payment every month, just like a mortgage is. And if you don't have extenuating circumstance like job loss or medical issues affecting that, and you've been late within the past year, even though the VA allows it, you're gonna have a very, very tough time finding a lender that will approve anything with any sort of collection in the past year. Now, if it's over a year old, that's a whole different story, and you got a good chance of approval on that one. IRS collections, big problem. You need to get that caught up, a payment plan. So it didn't have to be in collection, but if there's a delinquency with an IRS collection, you need to at least have it settled and be in some sort of payment plan. And you don't necessarily have to complete the payment plan, but you need to at least be in a payment plan with the IRS. Student loan collections, those are problems. Student loans definitely need to be caught up. And typically, that 1 year rule that I mentioned that most lenders go by would apply with student loans. If you got late on your student loans in the past year, you're gonna have a very, very tough time finding approval from everybody I've talked to. Same thing with installment loans. Again, you should be current. And again, past year late on the installment loans, your car loans, unsecured debts, that type of thing. That's a big problem if you have a late on that in the past year. Cell phone and utility collections. This is interesting. This is one where it's a little more lender interpretation. Things happen. For example, I had one recently. The guy only had a 530 credit score. He had nothing late except for his T-Mobile bill that he got into a dispute with the company, and he ended up breaking his contract. And so they charged him maybe $200, and there was a lack of service and some issues there, and he fought it. And long story short, we were able to approve that one. So definitely utility collections or something real small like that. I'm talking under $200. These little rinky-dink collections that they'll still ding your credit just because they can. They'll trash your score because they can. That's not necessarily a decline. And that really goes into layers of explanation and also lender interpretation. So those are some rules about collections. Now, if you like this video, please give it a quick thumbs up, leave a comment below. And also be sure to check my channel because I have a lot of other videos about all kinds of other VA related topics, especially with regard to VA and credit. And as always, if you have any questions about VA loans, feel free to give me a call. My number is 937-572-3713 or cscarpero.com. Thanks. Bye.